We started too.
Okay. Uh, Sorry, I'll restart. Hello, everyone. Thank you so much for joining us on this Friday afternoon. I guess it's been long since we had a conversation, so we wanted to have a talk with you on the markets. Last जो महीना ये जो मार्च का जो ये महीना गया, this has been pretty volatile, and we have seen some good correction in the markets in March, and a lot of the investors have been slightly worried about the correction and what has been happening with the market. So we wanted to talk to you all, right? So if you look at the markets uh, currently, let us first talk about the small cases. Small cap compounders has corrected 13% in the last 1 month. Rising responsibility has corrected 11%. HQRP has corrected 11%. Divi growth, emerging global giants has corrected 7% each. While the Nifty Smart Index small case has been flattish. It has not fallen, it has not grown. So we have seen some good correction in the market in the last 1 month. This is the normal nature of markets. If you compare it with the 1 year returns, the 1 year returns, despite the correction for small cap compounders has been 60%, for rising responsibility has been 60%, for HQRP has been 52%, for dividend growth has been 52%, for emerging global giants has been 52%, and for smart index has been 33%. So it has been a great year for everyone, and everybody has made money from markets in this year, and a lot of positives for the Indian economy. Indian investors investing, lot of appetite from investors coming in, lot of demand coming in for Indian equities. And despite FIIs underperforming, we have seen good money flow coming in from retail, from domestic institutions, from HNIs, from all across, right? And when the FPI start coming in, it has to be bumper, right? So we have already seen mutual fund flows continuing, wherein good quality companies have been demanded by mutual funds as well. So it has been really positive for Indian economy here, overall year, but March definitely has faced the burn, and obviously a lot of our investors are worried, and we wanted to talk to you about this. And so if you look, first of all, what I wanted to compare was that despite the last 1 month fall, we have done very well in the last 1 year, right? And the more returns the small cases have generated, like small cap compounders have generated the most returns, or rising responsibility, or HQRP, or dividend growth have delivered over 50% returns, and they have been more volatile in the last 1 month, right? Many reasons to it. If you look at the if you look at the reasons behind the fall, so because of advanced tax liabilities, a lot of investors have made money in the markets and they have to pay their taxes, advanced taxes, and for that, uh, since sabka mostly paisa has been parked in the markets, they have to sell some shares to be able to recoup the cash and give taxes to the government on their profits that they have generated in the year. Second, there has been some ED action uh, on some broker or punter who's been in connection with Mahadev app, and that led to some series of discoveries, and that led to SEBI action, and then that led to SEBI's chief coming in and saying. Talking about some of the valuations in small and mid caps being high, right? Definitely in certain areas, there has been a lot of growth in the stocks. But if you look at, so a lot of stocks are still available at good valuations. We also see that, first of all, the reasons, right? So we've seen that the first reason has been tax. Second reason has been these ED actions, SEBI chief commentaries that was there. Uh, and then because and then if you look at there has been follow-up actions, right? So there has been some brokers who have reduced the margins in this volatile period, and that led to a lot of people having to sell their stocks because they do not have margins, have reduced margins from the brokers. So a lot of follow-up action and trickle down effect happened in these stocks in the markets, and we have seen the impact, right? So this was the reason for the fall, and definitely see markets would never go in one straight line. It has to go like this, right? But the ultimate trajectory is definitely upwards, and we are seeing positive. If you look at the fundamentals, we are fairly comfortable. If you look at India's economy, we are fairly comfortable. Macros, we are fairly comfortable. Definitely, there has been last few years have taught us that there could be geopolitical risks, there could be inflation risks, there could be risks in world banking system. There could be a number of risks that could impact the Indian markets as well. So if there are risks which are uncertain, which cannot be counted or predicted, and these risks pan out in the coming year as well, we will see our markets being volatile. But if you look at the current situation in the Indian economy, current situation in the fundamentals, current situation in the companies, we are fairly comfortable in the overall ecosystem, right? Definitely, the valuations had gone up, and they had to correct a bit. We are to see a good uptick in the coming quarters if we see those like trends of continuing in terms of growth, visibility in terms of private capex, in terms of uh, restricting the China output, and in terms of exporting. If we see those trends continuing, if we see our macros and our companies visibility being good, our stocks will continue to perform. Definitely, this correction, what this has done is it has given us a lot of opportunities. Initially, we were especially if you look at before last month, before this correction of this 1 month March, we were thinking that hey, some of the new ideas are not coming because a lot of stocks had gone up and new ideas were not coming. But because of this correction, we are seeing new ideas coming into the portfolio, and we are seeing small and mid caps and across the spectrum, even some large caps coming in a good value zone where we could add them to our additions. Right. What we have been doing was we've been in our recent rebalance as well. We have booked profits in some of the stocks which have done fairly well over the last 2-3 years. We have booked profits जहाँ पे stocks double हुए, triple हुए. We have booked profits over there. We have also we are also not shy of keeping some cash on the to cash in on these volatile times. So we have, in certain cases in the rebalance, we have put in some liquid Bs so that whenever there is some good opportunity and if there are further volatility, we will further buy from liquidating those liquid Bs and going back to stocks. Third, we have after selling the stocks that have run up, we have bought some new additions to the list. Because of the fall, we have gotten those opportunities, and we have added them to the portfolios, right? So this is the action that we are taking. We are very cognizant of the fact we are not seeing any froth or any overvaluation. We are keeping a cushion of valuation in our portfolios. If you look, our portfolio, barring a few stocks where we see further run up, you will see very comfortable price to earnings. Our price to book is very comfortable versus the indices. We are keeping a close track on our companies. There is no fundamental challenge. The companies are continuing to give a good outlook on the future. So if you are continuing to stay invested, our prerogative is to not look in the past. What we have delivered in the past has been great, but we want to deliver good returns to you in the future as well. So we are very closely tracking the stocks. Right. So what I would urge investors is to stay invested. If you get volatile, especially these volatile times like these, what it does is takes out stocks from weak hands, people tend to get jittery, people tend to sell, and then we see those stocks coming back as well, right? So especially if you look at last few days, there have been some good correction days, and then there have been some good recoveries as well. We have seen this in COVID, right? COVID gave us a lot of opportunities, and then the stocks came back pretty handsomely. And those who left the bus did not make money. Those who joined and in fact added made handsome money over the next few years. So you have to stay consistent. You cannot predict with so much precision that tomorrow the market is going to fall, or the market is going to fall in March, and for the next 1 month, or the SEBI chief is going to come and say, or the ED action is going to happen in some company, and then because of that, the market is going to fall. You cannot predict all these things. You can only predict that your stock is good, your fundamentals are good. Do you want to add further? You want to keep some liquid cash with you? You want to like book profit? So those kind of actions we are taking on a consistent basis, but we want to keep it very disciplined. If you look at the markets, global have been really positive. We have seen Fed commentaries, and obviously election year. So election year, a lot of things happen, and you have to take cognizance of that. You've seen some arrests happening, you've seen some commentaries, but it has to be very populist, and you would see less of action on the policy front, and you'd see more of action on the political front, and that's what we are seeing in India, and that's what we are going to see in US later in 2024. Global is very positive because of the understanding of 3 rate cuts coming pretty soon. We are seeing FIIs being slightly negative in the year, but this year it has been flattish to positive. The DIIs have always been positive. Continuing to see fund flows. FNO has been neutral, sentiment neutral, trend has been very positive. India 10-year bond yields, US 10-year bond yields pretty stable, but we have seen some increase in dollar index 104.5. Brent crude has risen. This could impact the economies. Japan has gone in from a 0 rate cycle to increasing the rates. We've seen China. There are predictions of China improving here on, but obviously India stands to do well. Our GDP stands to on the prediction side stands to do well. India volatility index has slightly increased because of all these actions, but March will be slightly volatile. But this March is giving us opportunities to buy. From the demand standpoint, we are seeing investors continuing their conviction. We are seeing HNI investors, family offices continuing their conviction, and in fact using these opportunities to buy. So that's what we have to ensure, and that's what we have to learn from these HNI and family offices, that hey, if these family offices are, you have in your mindset, you have to be slightly contrarian, right? When you're getting opportunities to buy, and you're seeing that the visibility over the next few years is good, you have to buy. But if you're seeing that everything is very very overvalued, everything is very frothy, then you have to sell. So as a discipline, you should not be following the herd. You should not be buying at the peak. When you get these opportunities to buy in the market fall, you have to buy. So that's what our conviction is, and we are long term, we are very bullish. Short term, there could be volatilities, lots of political events happening, lots of things will definitely evolve in these times. There will be ED actions, there will be other things, there will be commentaries, those will be impacting the markets. But in anticipation, you cannot keep a very single-sided opinion. You have to stay disciplined and invested. This is like what we would want to say is that in if you look at our portfolios, we are fairly comfortable. There are certain sectors where we would see rotation, and we would see those sectors doing fairly well over the coming years, including the PLI, manufacturing. Manufacturing, everything is looking very, very rosy. We see that manufacturing is going to do pretty well over the coming years. Infra, we are going to see doing very well. Certain sectoral rotations in pharma is happening. We are going to see sectoral rotations coming in textile and specialty chemicals over the coming quarters as well. So you have to look at sectoral rotations, and that's why we are focusing that not that every sector does well at every time, right? So you see certain sectors doing well certain times, and then other sectors doing well in other times. So there are opportunities in terms of allocating. Valuations have risen, but India continues to stay overvalued, and or highly valued, or India will attract higher valuations because of the because of the overall macros that India is presenting. So I would urge investors to stay invested. Things are on track. Nothing to worry. Definitely, volatility has been there. Volatility. This is the nature of markets. Slightly more volatile than the usual in March, but you have to stay invested. We are not booking losses. We are not trading. We are investing. If we are getting stocks for cheaper than what we would like, buy more, right? So this is what it is, and I would wish everyone happy Holi, and and like, so for our investors, we are giving a code on HQRP. We would suggest our investors to invest in HQRP during these times, as if you look at the stocks and underlying in the portfolio, we are very gung ho about it. So for the next like from 26th to 28th of March, this code will be applicable. The code is HOLI 2024. So this is for our investors as our greetings for the festives. So thank you so much everyone for patiently listening. Looking forward to conversing with you again. Thanks.